Good morning, everyone, and welcome to the European crossover webinar. And I had some German GDP number. I don't see it here in the Reuters feed. But yeah, full German let's see, GDP came in at minus 5%. Estimation was down negative 5.1. Previous was down 0.6, but for whatever reason, I didn't see it here. We do have the Ipsos survey. You can see that consumer sentiment survey index, and that'll be at the top of this next hour, which will be German, French, UK, Italian, and Spanish released all at the same time. Then as we move into the US session, we will have import-export prices as well as initial jobless claims. And that's actually going to be the only data that we'll have out at that time for tomorrow in the US session. Take a look what the indexes are. We did make a move. We recovered yesterday and made a move higher and actually continue to move higher into the Asian session where we finally backed down. You can see here, but we're kind of making a move back up. But we did go and reach pretty high, got above 13,000. Then we came off rather quickly, came up and set up this hammer on the 30-minute. We've kind of just meandered around, took another dip here towards 12,930. Recovered in the market's kind of holding steady. That's with the Nasdaq. And yesterday, completely forgot to take a look here at Bitcoin. And Bitcoin, take a look on the 4-hour chart. We're still holding up rather well. I mean, a lot of people were looking for this market to break lower, but you can see how if we break above this 41,000, I think the last time I looked, I think my outlook was for, I think it was either 52 or 55,000. And you can see why, because if we look, we made up to 42,000, we sold off. Okay, fine. And I think a lot of people are looking for us to, from here, to break even lower, which could have been reasonable. You can see we need to get above this 38,600 right here. But if we get above that and we clear 42, the immediate stop would be, I think I had 52,000 or 55,000. I obviously we can move a lot higher, but boy, this is going to be something else if this market does that. We turn around and come right back, and we come off from a very key level. We get up above 40,000. We take a dip here. We get up here. We meander around. We hang on around a lot longer than you would have thought. Come up here to 42, and then we break. We break pretty hard. If you don't flush people out here and we end up pushing above that 42, yeah, I would look for probably closer to about 55,000 if we get above that. I mean, on the immediate move, that is, and holy smokes, if this thing took out 50,000, we'd probably see a run up really closer to more like a 58, probably something like that. We can always do the math on that, but heck, that would really get this market going. On immediate move, you could do a fib extension, which for some reason, not for some reason, but Bitcoin trades very well against these fib levels. But if we were 127% extension would get us to 45, that would make some sense. And the 161% would get us right at 49,279. That's on this immediate pullback. But like I said, we'll see how we hold up. But as I mentioned, for this market, you had a pretty good pullback, would have flushed people out. Now you get this rebound here. Okay, fine. We come back here and then we probably break off, or we come up in here and then we break off. But we're kind of trying to hold here. Like I said, if we get above that 42, the first immediate look though, look at obviously is challenging the 50. I would think that we can break above that, and it's going to probably get the market going a little bit nuts. But they would definitely making an eyeball for 50. We'll see what happens. And let's take a look at the news. Australian New Zealand dollars pause, awaiting clarity on Fed tapering. The Australian New Zealand dollars took a timeout on Thursday as investors awaited more guidance on U.S. monetary policy and whether the recent spike in Treasury yields was just a flash in the pan. Also was holding firm at 77.50, having topped 77.81 overnight. That lifted up from 77.66. Or I should say up from 76.66, low hit earlier in the week, but short of the recent high of 78.19. The Kiwi also hovered at 71.92. Treasury yields backed a little overnight after Fed officials played down the chance of tapering and asset buying this year. Markets are now anxious to hear from Fed Chairman Jerome Powell on Thursday, where any hint of an eventual tapering could send yields surging once more. For now, yields on 10-year Australian debt had dipped to 1.043%. The first Australian T-note sale of the year drew strong demand, with an April 2021 line drawing bids for almost 7 times the Aussie 750 million producing an average yield of 0.0089. Analysts, however, are wondering whether the Reserve Bank of Australia will extend its current $100 billion Aussie bond buying campaign past the deadline of April, given the surprising strength of recent economic data. And the dollar extends rebound as investors await U.S. stimulus details, and Bitcoin bounces. The dollar extended its rebound from near 3-year lows versus major peers this Thursday, supported by higher U.S. yields as President-elect Joe Biden prepared to outline his plans for massive fiscal stimulus. The dollar index held on to gains more on Wednesday in early Asian trading as investors continue to align bearish bets. The dollar has ridden 4 of the past 5 trading sessions. Bitcoin also held on to 10% gains it made on Wednesday as it rebounded after sliding almost $12,000 for an all-time high of $42,000 hit last week. Biden will give details on Thursday of a plan for trillions of dollars in pandemic relief. Expectations are that more stimulus will fuel faster growth that has lifted U.S. yields. However, many analysts expect currencies bounce to be temporary as a buildup of the bearish dollar positions are shaken out. Longer term, they expect the U.S. stimulus to expect risk sentiment weighing on the greenback. I think positioning in risk assets is becoming a concern, so there could be a squeeze in the dollar near term, said Shusuke Yamada. I am focusing on gradual dollar weakness in 2021, he says. FX speculation has been net short the dollar since mid-March as investors' surging appetite for riskier assets hurt demand for the greenback. So not a whole lot there. I really wanted to take a look at the S&Ps, which we don't focus too much on here. I do keep it here just to keep an eye on how it's trading in relation, like yesterday, when I was looking for the Nasdaq to slide, and we're actually holding up at the time with the S&P. So yes, they'll trade differently, but not, completely disconnected. So if at the time I was looking for the Nasdaq, I thought it might go lower, and the S&Ps had already dipped, and they're kind of holding. I'm like, well, you know what? So we may not expect a further break. Doesn't mean they can't diverge some, but a complete disconnect is usually not likely. So anyway, moving back to the S&Ps. We're still holding up very well. Look at that. And actually, over the last week or so, it's actually been holding up better than the Nasdaq, although the Nasdaq's trying to make a move back higher again. But really, nothing new here on the S&Ps. I really don't see anything here that anything definitive. The resistance is going to be right there at that body close right there. It should be 38.22. I don't see anything that of note here. We're just holding up and still holding it rather well. And until you break below 37.80, there's your support. You can see they went right down there to the body. Should be 37.68. As I mentioned, Bitcoin's got to get past this 38,600. You see, same thing, run across these touches here. 1, 2, and then actually even the stab up here, you could almost call 3, but really right across here. And if we can get above there and push, boy, it's going to send this market going a little bit bananas. And just like I said, I didn't even know they had made a note about Bitcoin, but once again, with I think they would have expected the market to pull back in here, like this from here, trade back down here towards 32. The fact that we broke above, and you can see here, this on a 2-hour chart, we had a Greystone Doji here, right there. Actually had a little bit of a spinner, like a small legged doji right here, and then the Greystone Doji really opened the door. Some people probably thought, okay, now we're going lower. And the fact that we pushed up here probably stopped some people out. But here's the key. Once again, if we can get above this 38,600, this is really going to get this market going. And once it gets going, it's going to spook some people thinking, whoa, wait a minute, are we going back to the highs again? But we'll see what happens. We shall see. And there we are on the Nasdaq. Let's go back to the other screen, and we can do the analysis. And Lorena wanted to take a look at Apple. Here's the key thing on Apple right now. Remember, here's that key 129. If you remember back then, and here's the thing is that the NASDAQ hasn't been trading as much based on for a while, the NASDAQ was, the index, the NQ, was trading very close with the Fangman, which would make sense because they make up the key portion of the NQ. Obviously Apple has more weight than anybody else. Then you look at Microsoft, Amazon, Facebook, obviously a big mover. And I would call it more of it has been a more momentum mover. But as the NASDAQ had made new highs, we did not see these highs being made across the board in the Fangman stocks. Because like I said, if you looked at Fangman in relation to where NQ is, these stocks aren't proportionate to where the NQ is. Look at, well, obviously Facebook has its own reasons why it's breaking down. It was always weaker, but it finally broke lower. You would have thought, although it's a whole different situation because it's with the whole um, Twitter and Facebook and them removing or canceling out Trump's whatever. But anyway, Facebook was already in a weakened state, okay, and it broke lower. So you can see why that may not have gained as much, although Facebook had been a pretty big momentum mover. So you'd have thought at least the market would have made a play on that move. Now, that being said, remember, look at Amazon. Look, it's nowhere near its highs. Here's the highs, 3,500. We're at 3,165. Now, does that look like the NQ? No. You see what I'm saying? And then we made this move back up here. This went along with the NQ and thinking, okay, yeah, this makes sense. Now it's starting to break back. Look, we fell off from those levels, 33.50. You fell off $200, more than $200. You see? So that's what I'm saying. They haven't really been trading, or NQ hasn't been trading. It's kind of like doing its own thing. But now I will say the pandemic plays like PayPal, and I've shown you PayPal, Peloton, eBay. They've held up much better, and that would make sense. And apparently that's what the NQ is focusing on. It's kind of odd though, because once again, it can focus on that. It could probably be where you see a divergence where it could be weaker, but it's holding up much better based on those. But these are where the real volume is. You see what I'm saying? So yes, Apple's still doing well, but it's not, and it's very close up here, but it's not to the point that you think it'd be right up here closer to 135 and say, oh, well, that's why the NQ is so close. So if you're looking at the NQ, you'd be thinking Apple should be trading here at 135 and Microsoft closer to 220 and Amazon closer to where it was right here, 33.50. Google would be okay. Nvidia would be a little bit fair, maybe a little bit higher, trading at 55.62. And Facebook, although like I said, it's got its own reasons, should be trading closer to around right there, 286. So you can see where there's been that divergence. It hasn't been close. But like I said, those pandemic plays, they don't carry as much weight. So you would, like I said, then you would think, well, we should be lower, but maybe not really a big push to the downside at all. But I'm just saying is here's the NQ holding even well above. So it's just kind of really interesting because this is where the heavier volume holding is. But anyway, that being said, I already looked about Apple. So Apple, here's that big 129 that we had talked about from before. You can see right there. That's why I had that pink line, and then we had that 78%. Apple broke above it. Remember, here we go. We had this doji, and we broke even higher, and that kind of made sense to where the NQ was going. But then we came back and we broke lower, came down here and broke that 129. That was key. So we opened the door for us to go lower. And look at this. This is weird. You think we were looking at maybe a 15-minute chart or a 5-minute chart, but this is a daily chart. Look here. We break below 129, so we think we're going to get some follow through. Then we jump up and we get this little, I don't know what you'd want to call that, this very tight range here too. Then we break lower. Then we're hanging around 129. Now we're kind of above it. So it's just weird. It's the way these marks are starting to trade. Obviously, they're kind of hanging on to see if they get something from Biden's stimulus, but there was rumors it was going to be closer to 3 trillion. Now I saw a headline yesterday saying, no, it's closer to 2 trillion. I don't know. And like I said, yesterday we saw the U.S. deficit go to 131 billion deficit in 1 month, a new monthly record. You have to wonder how long is that going to hold up? And I saw someone jokingly yesterday after I put that out said, just put it on the tab, which my thoughts are, yeah, for a while it's been one of those, it won't matter till it matters, and not trying to be a deficit hawk or anything like that. But the thing is, people, not completely, but people aren't working. So if you're not working or as much and you're spending way more and continue to spend even more, how quickly does this catch up? It's going to catch up with you rather quickly. So we'll see how that plays out. But anyway, let's go and move into the analysis. And you can see Tesla's just kind of hanging around here. A little bit on the lower side, but hanging around. But you can see here PayPal. That's the same. Look, well, that kind of makes sense. You see where PayPal is? We've jumped up. I think we even went close to a new high. PayPal. And Peloton. Same thing. Look at that. New highs, Peloton. So they're really going for this pandemic play, which is kind of like, okay, here's eBay. eBay still holding up. Here was where we were yesterday. And this is how we closed yesterday, but I'm saying the day before we were kind of pulling out of here. But that's what I'm saying is that unless it, once again, it just feels like the market's trying to make that last play, that last play about the pandemic spending, we shall see. Someone had mentioned about the Russell yesterday, and look at that, new highs on the Russell. But anyway, let's go on and move into the analysis. So here's the euro dollar. So the euro is an up and down, is an up and down affair. Down on Monday, up on Tuesday, down on Wednesday. Support on Thursday will be 21.12 with resistance at 22.39. You can see here, look at this. Fall down, down, up, then down, then doing just like kind of like all over the place. But we'll see. We're kind of holding here, but I think we'll take that dip down to that 21.12. Moving on to cable. This was really surprising the way that thing jumped up like that. But with cable after a strong run up on Tuesday took a pause on Wednesday after challenging 37 even. Resistance on Thursday will be once again 37 even with support at 35.72. Then to the Aussie dollar. The Aussie is spinning its wheels, although still bullish. Resistance on Thursday will be 77.78 with support at 76.88. Then to the Kiwi. Not really any movement here for now. After these big moves we'd seen over the last couple of weeks. The Kiwi remains bullish, but resistance we'll be looking at will be 72.49 with support at 71.17. And this pretty much stays in place. Just one pip off. Certainly looks like we're open to a little bit of a dip back here. Hence, we're coming up with that 71.17. Look at the dollar CAD. I know a lot of people are disappointed they got long yesterday, and this thing is still dipping back. Dollar CAD remained weak on Wednesday, open to a pullback even lower. Support on Thursday will be 26.54 with resistance at 27.42. The dollar peso. The dollar peso, after reversing on Tuesday, stayed in a tight range on Wednesday. Support on Thursday will be 19.73 with resistance at 19.96. And once again, these markets are trading very quiet after these big moves. On to the dollar yen. Dollar yen dipped on Wednesday towards 350 before slightly recovering to close the day on a positive note. Resistance on Thursday will be 402 with support at 352. We did click closer to 420. But I'll stick with what we had was 402, although it looks like we almost came to 420. We did jump up above it. We're just a little bit below it right now. And then the dollar index. The dollar index recovered half of Tuesday's loss. Resistance on Thursday will be 90.67 with support at 98.89. I'm at 88. $89, $89. 7. And on to the Kiwi yen, we're still holding up relatively well here. We had 74.44. Yesterday, the low was 74.34. We're trading up to 74.78, so I don't see any changes here. 74.44 was 75.11 on the upside. Onto the euro pound. This thing has really stayed weak. I mean, weak. We had 88.89, and we still dipped down here. We're holding up relatively well this morning. We'll stick with this 88. Well, it's not 88, 88.99. It should actually be down right there to that bar there, which is, well, sure enough, that's where they went, which is 88.85. Yeah, we did have 88. Okay, so we were down here. 88.85, which is that body. And on the upside, right there, see right here, this wick comes close to this body and this prior wick here. So not an exact science, but I'd be looking at 89.43. Onto the euro odd. Man, this thing is still breaking lower. Holy smokes. Right there. 56.21. Potentially, yep, 56.21. I don't know if it'll get down there, but let's see if we can find anything before there. There's a wick right there. Right there. 56.62. We'll see, but that's a decent little low there, 56.62. And then on the upside, it's going to be that body right there, 57.15. Onto the Euro Kiwi. We're just holding here. No news. Right there is going to be 68.41. with the upside right there. Actually, this wick. So actually, if we are able to make it up there, 69.57. And on to the ASEAN, which has remained on fire. We had 80.70, and you can see we're coming. That 80.70, based on that body, yeah, 87 is still going to remain the same right there. 80.70, and downside. Well, we're holding up holding up very well. Immediate support would be 80.15. Onto the guppy. This is still holding up very well. We do have a tweezer top right now. So we'll go with that for the resistance, 42.22. And support right there, that first body. Actually, it would be right there, coming across that body. It should be 41.05. And lastly, with sterling odd, we did make a race up in here, but we didn't do much of anything with it. You can see this wick and this wick, these two right there. That would be it for right now. 76, 73. Bit of a disappointment on that rebound. And on support right there. That wick right here, this wick there. 75.25. If we break lower. And that'll be it. Other than that, everything's trading relatively quiet. Probably not going to see any movement until we get into the US session. But thanks for joining us here on the European crossover webinar, and we'll see you in the chat room.